Today we have a returning guest, Crypto Miki, who remains anonymous, but his methods and his ideas are always transparent.
Yes, I remain anonymous, but again, the most important thing is probably the charts. It's not my face. In fact, news almost now I just kind of throw it out the window. It's almost useless to me now, right? I just look at what the charts are doing. And news is not, it's useless, but it's not as important. Like a good example, if we have really good news and the market goes up, but then just reverses on an instant, it just starts selling off, that would be considered like a news failure, right? Like that's not good. Had such good news, the market should be going up, but it isn't. So something else is at play here. And that is the beauty of it. If you keep going and you keep pushing forward through failure, success will come at one point.
Hi everybody, this is Boris Schlossberg. Welcome to another edition of the Trading Battle. We get to talk to some of the best traders across the world. And today we have a returning guest, very, very special trader. One who I think has an incredibly unique and interesting take, not just on his approach to trading, but his general philosophy about how trading should really be run. Returning fellow to the Trading Battle, welcome back, Crypto Miki, who remains anonymous to this day. He remains as cryptic as he's always been, but his methods and his ideas are always transparent. How are you? Good to see you, man.
Thank you so much for having me back, Boris. And it's good to see you too. It's been a long time. And yes, I remain anonymous, but again, the most important thing is probably the charts. It's not my face, right? We like to focus on the charts, and that's our main focus always. So,
But you know, Mickey, before we get into charts and talk about everything else that is interesting to you right now, let's talk a little bit about your background, because you've come to trading in a very unique, personal way. Tell us a little bit about how you first discovered the financial markets and what attracted you to it.
yeah, 100%. I can dive right into the beginning, right? We could start off when I first started to go to school. I was actually in accounting, and it was so boring. I was like, man, I like numbers, but there's no action here, right? And then my friends were like, why don't you go into finance instead of like getting into accounting, right? So I shifted my studies into finance, and when I got into finance, it finally got exciting. I was like, oh, right now, what are we talking about? Stocks, bonds, portfolios. There's so much potential, so much money to be made, and that's really why I started to fall in love with investing, but not trading. And it's actually my friends that was in school with me that got me into trading. At first I was like hesitant about, all this technical analysis, and then I got into it a little bit more, and I started to see the opportunity in the statistics and the probabilities. I was like, okay, I like this a lot more. And then I really overtook my friend. He gave up on it, but I kept going. And that is the beauty of it. If you keep going and you keep pushing forward, right, through failure, success will come at one point. And that is the most important part. It was definitely very hard at the beginning, but now, I could say like
What was hard about it? The psychological part of it, or the
there is a
technical part of
huge psychological factor, right, to get over. When you lose money, it is, at the beginning, it's like, man, I've just blown up my account. I've lost all my money. Where do I go from here? I start over, right? And you can go through many accounts, but you learn from your mistakes, right? And that's the most important thing, is learning from your mistakes. And it's better to start off when you're younger, when you have less money to lose, because when you start off with you're older, you got so much money in the market, man, it's so much harder to recover from that when you're
I agree.
significantly older, right?
Absolutely. What did you first start trading? What was the instrument that you started when you were?
I first started trading weed stocks, and that's where I lost all my money. I was trading at the worst time, I think.
Okay.
It was just I was looking at news. I was just looking at the line chart, not even the bar charts. I was like, man, what's going on? I don't know what's going. It was almost like a very, very rookie trader, right? Nothing like I'm doing today, and definitely won't be doing that stuff again. Obviously, looking at sentiment a little bit more instead of news. And in fact, news almost now I just kind of throw it out the window. It's almost useless to me now, right? I just look at what the charts are doing.
Do you look at how the chart is reacting to the news occasionally?
100% too, right? News is also, it's not just that it's useless, but it's not as important, right? I think if the news is reacting, if we're reacting positively, or like news failure, like a good example, if we have really good news and the market goes up, but then just reverses on an instant, it just starts selling off, that would
Right.
be considered like a news failure, right? Like that's not good. Like
Right.
we had such good news, the market should be going up, but it isn't. So something else is at play here.
Yes, I agree. The news failure is one of the better trades in the market, over and over again. Um, you started out as kind of a fundamentalist. You said you were using line charts at first, but you've now become a very, very adept technician.
Yeah,
Tell us a little bit about your journey into technical analysis. How did you get that education? What sparked your interest, and how did you really become proficient at reading the charts technically?
Yeah, so you know what? A lot of what I learn is self-taught and looking at other successful people who are trading. Probably like yourself, right? If you're a successful trader, I'm going to take notes and learn from the people who have made money and have found success in the market. And that's where I found like a lot of tips and tricks and little things that I learned here and there I add to my trading strategies, right? And
Who was your sort of who were a couple of people that you took inspiration from that you learned technical analysis?
oh man, there's so many over the years. It's kind of hard to remember all of them, but I can definitely name you like some pretty big ones. It's like probably one in Canada. He lives in Canada. He's from the technicaltraders.com. It's Chris Bermulin. He's very good, very down and straightforward, and he cuts through the nonsense. He goes straight to the charts as well. I don't know if you've ever heard of him. He's actually gone on like the Kit Coach show and did all sorts of shows as well on YouTube.
Yeah.
And I also for, like, crypto, I look at Crypto Face. He's a pretty big trader as well. He trades pretty with some pretty
Mhm.
big size, and he uses pretty good indicators, as well.
What specifically in technical analysis attracts you most? Like what tools are you using the most now to help give you the edge?
Right now, what gives me the most edge is using Elliott Wave with, Fibonacci, retracement tool with, like, targets, and again, Elliott Wave is so subjective, right? One Elliott Wave analyst can give you a completely different count from someone else that does it,
Right.
and that's like it's pretty interesting because then you can get all sorts of opinions from different Elliott Wave traders, and sometimes they're completely wrong, sometimes they're completely right. Right? I could have a right Elliott Wave count right now, and it'll develop to be incorrect, but someone else's count suddenly becomes valid. So it can always switch. The probabilities can always change as the market changes as well.
So how do you sort of keep several Elliott counts in the back of your charts? How do you sort of adapt to the fact that Elliott wave can transform itself? It just
Absolutely. So that's the part of risk management, right? So I always give myself like probabilities. Like right now, a good example would be Friday, right? The big drop in the crypto market. There was an Elliott wave count for a bigger drop in the market, or as on my count, it's called like a flat. And we would have seen a really big drop back down to below 100, And in fact, I had probably given that probability of playing out maybe like 10%, like pretty low. Like I didn't think it was gonna happen. We had so much momentum.
right.
We had so many things going for us. But once like we had a dip buy area calculated for my favorite tracement that didn't play out, that was when I was like, okay, this thing may start to go. The probabilities have now shifted, right?
Right.
So that's
Can you maybe you know what it'd be really wonderful if you maybe you could walk us through uh, which buy area did not play out.
yeah, if I can share my screen here, I
Yeah.
could definitely show you, switch it over. So, I could give you an example, right? So this is my updated count right now. So,
Okay.
for example, I had this wave 2 just, finished. I had a good reaction. It came higher. I had another dip buy entry here for people who missed out on this move,
Mhm.
and this one actually failed because we ended up going lower, right? But
So
by
how do you like
yeah.
a failure to you is just sort of taking out the lows of that little
Yeah, this the second
chunky area?
you start to break the lows of the box,
Right.
that's when I start to say,
Even though it did not break the lows of the second wave.
yes, that's like a hard invalidation. So this would be like a smaller time frame buy area that got invalidated, but the bigger count like this was still valid because we didn't take out the lows. So we ended up going higher, but the problem is that in Elliott wave, there's no guarantees that you're gonna get a 4 and a 5. We never got that fifth wave. I had a buy area here, which we did get a reaction, but it ended up
It just
failing and coming
got
lower, right? We took
right.
out that low. So then if you were long here, you'd either take profit, stop out at break even. You had a second chance for this, a double correction, which ended up failing, right? And this is you have to stop out here. You have to take it out. You have to close your trade, or you could stay in and, put your stop at break even. But really, what happens usually when you fail one of these boxes, right? You end up going lower. And look how low we went.
Yeah.
And the way we calculate the new count now, kind of just go back here and give you an example, right? We calculate the flat target. Usually flats can go pretty deep. And there you go. Or actually, I think this is a flat, so I just calculated a little bit wrong. I got to bring my box down a little bit. We hit it pretty on the spot here.
Hmm.
There you go.
So now this is a 1, 2 on the large one, and then you have the
And we have a possibility of getting another dip here and a potential buy for us to go higher. But again, if
right.
we start to fail lower, then then we're talking about an even longer and deeper correction. And if that starts to break, then we got to start looking at other indicators. Right? I don't just use Elliott Wave as my holy grail, right? I use other indicators like market cipher to give me an edge to see where are we in the cycle, where is money flowing at the moment, right? Where is the momentum?
What is this market cycle indicator that you're showing us?
Yeah, so market cipher was created by Crypto Face. He's a pretty big crypto trader, and it's worked really well for me in the past to kind of know where we are currently in the crypto cycle. If we're right on the edge of entering a really big sell off, usually money flow is back at the zero line and we're cutting into the red. And when that happens, you could see I just charted it,
So
it's a
the red dots on top indicate money flow going negative.
or you can see at the bottom here, right? The red wave here, that's what red money is really leaving the asset on the weekly time frame.
Yeah.
And that kind of indicates a really big sell off is going to start. And that usually leads to big drawness.
How is that? Do you know how is that money flow calculated? Is it
And that's the thing, right? A lot of these guys that create these indicators, they keep all their scripts private. So I wish I could see how he calculates it,
right?
but unfortunately, he doesn't release it publicly just because it's a
I wonder if it's volume over capitalization or something like
yeah. But
very low vol-
unfortunately, we'll never know, right? Unless one day he decides to show us exactly how it's
right.
calculated. But again, it works pretty well for me on the weekly cycle to know where we are. Like in 2015, we saw this big drop of 51% after we cut into the red. We saw this big drop here of 64% when we cut into the red. And you can see the same thing back in, I got to open the chart up a little bit more here so you can see a little bit better. Back in 2014, cut into the red. Even though we cut into the red slightly,
Right.
it kind of already started, right? We had that bit of a bull trap here, and then it just ended up rolling over 59% anyways.
Yeah.
So once we start to cut into the red on the weekly, you know, even if you're long from 15,000 right, and we're at 112 or 90,000, wherever we are, it's not a bad idea to start taking some profits on your
Yes.
spot longs. If you're not,
Because it could correct to 60.
you could have a substantial drop, and that's you wanna protect some of your gains that you've made.
Isn't it always the story of crypto that we triple and then we give back like 75% of it.
Yeah,
So,
I mean, right now, since we cut into the green, or
mm,
if you want to go from the halving, you can get different percentage returns. But for me, we're up like 362%.
right.
And then if you go from the halving, you're probably up like something like 96%, or from where the Bitcoin halving started. But
Right.
for me, I usually start to buy pretty heavily was
The corrective phases in Bitcoin have been as steep as 70, 80%, right?
yeah, you can get even more, right? It can be really nasty from peak to
Right.
trough. Like if you go from like the last bear market we had,
Yeah.
it was 77, right? And there's
So,
been
what was the draw on that market? Was it like
it
30?
was like 69,000 all the way down to 15,000.
Yeah, which is just, it's literally
It's pretty insane.
it's like, yeah, 70, 80% of your position
It's a really big loss, and right now, like, if you look at and this is just Bitcoin, it's not like all any of these alternate coins that a lot of my
right,
my members love. They love the altcoins, right? Because there's so much more upside risk, but the drawdown sometimes can be even worse. It could be 99%.
right. I mean, there's something called Bitcoin dominance, which is
Yeah.
there's the share of Bitcoin relative to the rest of the market. Where do we stand with that now? Is Bitcoin dominance predominant now? In other words, is Bitcoin
Yeah.
performing better than the rest of the market, or and that's generally a sign of more speculative versus less speculative. So if the market is more speculative, Bitcoin dominance wanes. If it becomes more conservative, Bitcoin dominance increases. Where do we stand now?
So from where I see Bitcoin dominance going is probably a little bit more upside, but I still think that the Bitcoin dominance could be in a downtrend, which means altcoins at one point will get upside, but to when is that going to happen? I mean, like if you follow crypto Twitter or crypto X Twitter, whatever,
Yeah,
everybody's been talking about altcoin season for the longest time now, and all they've been doing is go down, right?
right,
Which is doesn't really inspire me to trade these coins with leverage to the upside, because,
right.
right? I mean, like, especially with this big drop that we've gotten recently, it doesn't really inspire confidence.
Speaking of this, so the market kind of matured. The crypto market reminds me of like the regular market where let's say Bitcoin is Nasdaq and altcoins are Russell, the lower market capitalization stocks. And everybody's always like, Russell's gonna rally, and it still hasn't. It's just kind of a same concept. The
Yeah,
lower
yeah.
quality issues have not had the.
I mean, right now, the Russell is probably the one that's shining the most, right? It's making new all-time highs. It's come back for with a vengeance, and
Right.
it's. I think I was looking at positioning on the Russell 2000, right, using the COT data, but we haven't had a couple reports lately because the government shutdown. But
Right.
when I used to look at it, it was actually pretty heavily shorted. It's like probably the one that was shorted the most
Right.
out of all the indices. And right now, that's the one that's gone up the most. It's squeezed up the most.
Yeah. And that makes sense. It's playing catch up.
Yeah.
Um, and I guess it's playing on the idea that maybe we have a little bit more juice in the economy, and that the,
Yeah.
the current
It
administration,
could be.
yeah, current administration wants to really, with lower interest rates is always positive for the Russell
Oh, yeah,
because
for sure.
all these companies have junk bond debt, and they any kind of a relief on their debt sheet is almost better than growth. It's or at least as good in
Yeah.
terms of the case. Um, so one common idea in terms of trading, at least I believe so, is that volume itself is probably the most important variable, not as an input into trading strategy, but just as an input into what you should be trading. What I mean by that is, the more the volume grows, the better it is to trade the asset. And of course, no volume has grown bigger. No volume has really, shown the greatest amount of interest in gold recently.
Yeah.
I remember
Yeah.
2 years ago, maybe when you and I were talking, I don't know if I was talking with you, but somebody else, I said, gold becomes a mega rally when it crosses 250,000 contracts per day. At that time, it was doing maybe 200,000, 150 up 1,000. And now we're, of course, at 350, 400,000.
Oh
So,
my god.
and that, and that, of course, is very, very positive for anyone who wants to trade because that creates liquidity, it creates interest, creates price movement.
More participants, right? So
Yeah.
it definitely helps the asset.
More participants always create more price action, and less participants create less price action. So,
Yeah.
I wonder how you feel about that, and also, I'm curious. Maybe we could take a look at gold and see uh, where you're projecting and how things stand right now on the charts.
Yeah, I can definitely show you my count on gold. So I mean, me, Boris. I've been bullish on gold sub 2000. So
I
now
remember it. I
I'm
remember it.
dancing on my bed. This thing's going up. So from what I can see gold is getting pretty extended. It's long in the tooth. I can only draw so many fifth wave extensions. At one point, this thing needs to end. And what it does, it's probably
Sorry to interrupt you.
Yeah,
what
go ahead.
what determines the wave extension? Is it a Fibonacci projection?
No, so well, I can definitely draw fib extensions with fib targets with or like the wave threes and stuff. But when it comes to like how many times it can extend, it can extend it technically an infinite amount of times, right? And it can continue to create one twos within itself
Right.
and basically continue to chop and create more and more bearish divergence. I'm pretty sure we were creating a lot of bearish divergence, and then we
What
erased this.
can you show that on the chart and explain to us what is the bearish divergence looking to you like?
Yeah, so the bearish divergence to me, I think I had this wave three here somewhere like this,
Right.
and we had peaked and we had created a fifth wave. So fifth waves for me is with bearish divergence. But when you erase that, it's a third wave extension, which means you're kind of like in a blow off top move. Like you're in a really big expansion. This is
Right.
very indicative of a wave three. You continue to go up every single day, almost little to no pullbacks. And when the pullback does come, right, you're going to be buying a wave four, right? It's going to
Right.
be a nasty pullback. You'll come down, you'll be able to recover, you'll buy the dip, and then you'll make another high, and then maybe this cycle will be done. But then you're buying at the end of the move.
Where would be the accumulation point of wave 4 on this? Like, how do you is it a
Oh, like a dip buy area, right? How I calculate the
Is it a
future.
Fibonacci calc, and what percentage
Yeah.
Fibonacci are you calculating?
Yeah, so I can definitely show you. It's pretty straightforward. You could see I can show you in silver too. It works pretty well in general. So
Silver, by the way,
keeping it
doing
simple.
doing even more of a parabolic move than gold. Yeah.
Oh yeah. Oh yeah. Silver's it's even it's even more explosive.
Yeah.
So let's just say the price were to do something like this. I would calculate my fib target just from the low of the A to the top of it, from where it started, and bring it down to the top of where the wave B ends, right? Wherever B ends, it gives me a target between the 100% retracement to the 618.
Okay.
Usually, if my if I'm correct on the count, we will see some sort of price reaction once we get to the 100% extension, right? So a good example is on silver, right? I had a lot of my members were looking to get into silver, and we had flats and we had three wave swings that when we went into these small buy areas during the uptrend, and then it just started to take off. And at this point, it was pretty hard for me to give more areas to buy because then the moves are so small and there's on such a smaller time frame. Usually they work not as well when they're on smaller time frames. When they're on larger time frames, I find that they work much better.
Have you ever heard of Mark Minervi? He's a famous market wizard, stock market trader. Have you ever heard of him?
Mark Minervi. I don't know if I've heard of him. I mean,
So
I've heard of a lot of people.
there
I must
he
have heard of
was a
him.
pretty famous stock trader. The reason I'm sort of bringing him up is because as you are painting the picture in silver and you're, what you're defining as flats, he has a pattern called volatility compression pattern, which
Mhm.
is sort of very similar. It's basically you make fresh highs, then the retraces are shallower, retraces are shallow, retraces shallow, and then you explode to the upside. It's really interesting how various descriptions of price action really are almost, it's just simply a different story, same scenario type of a
Exactly.
situation.
A different way of charting can give you the results, the same results as someone else using a different strategy.
Yeah, because you're essentially describing the same thing, but just in a different format. I find it fascinating.
Yeah.
In terms of its look. So gold is parabolic. I mean, one thing that's sort of
Oh, yeah.
would you say that at this point, too many people are forecasting 5,000? Um, that there's a strong possibility we're going to fail before that. And by fail, I mean maybe we come back down to 3,000. But there's
We
a
get a big drop, right? Like a big, nasty
a
wipeout flip.
really really big wipeout. The reason I say this is because Jamie Dimon today, which is I think in many ways just the ultimate conventional wisdom sentiment move. Said yes, gold is really strong. I think it goes to 5,000. And when the chairman of J.P. Morgan Chase says that, you kind of feel the story is done.
Yeah, when it starts to make on headlines, right? For the longest time, gold was actually on a rise for 3,000, 3,200, and you would never see it on CNBC. You'd never see it on the news. And now every day you see gold
No,
on
no,
CNBC.
there's no doubt that there's far greater popular attention to it now. Uh, and it's possible that we could just overcome the overbought condition. It's some 92 RSI. It's very, very overbought. It's not that I'm looking to short gold. It's just that I think
Mm.
people who are investing in gold at this point need to be mindful of a there could be
I definitely agree.
a day where we could have like a 500
Yeah.
$500 liquidation, the same kind of thing that we saw in crypto on Friday, where there are no bids. It's just it's all
It's just sellers because there's nobody left to buy, right? Because everybody has bought and they bought at the highs. And
right. And then and then there's a lot a lot of the shorts, because remember, um, gold is also, I mean, it is the same JP Morgan Chase that's on the selling all those shorts because they're market making the contract.
yeah,
And they need to buy it back because their physical may be break even is 3,000. So they want to print all those, offers for 4,000, 4,500, come back, buy back, rebalance their books, and then come back again and reoffer it again. Um, so I do think it's interesting. I mean, I wonder how looking at the count, it's certainly possible that you could have a corrective wave here that's pretty significant, like down to you.
yeah.
What does
I
it look like here?
definitely, to me, it looks we're in a wave three, and it's getting really crowded. It's all over the place. I feel like we're gonna get a correction at one point. Whenever that is, I can't tell you. But when it does start, it's gonna be pretty nasty, and it's gonna be scary. Most people are not gonna buy. They're gonna sell. They're gonna sell out of fear because, oh my god, I'll buy back lower. It's going down.
Well,
But
I think a lot of people who are coming in late, and they say you bought at 4,000 and it's down to 3,500 in a day. They're going to be down 10% in a day. They're going to start freaking out, and then
of course,
then it can be 20% down to 3,200. They're going to really freak out. And it's probably maybe wash itself out underneath 3,000 before it starts to rebuild. It'll be interesting to see. Maybe you and I are both wrong. Maybe we're just a little too pessimistic. We've been around the markets too long.
maybe, maybe that's
I've
true.
seen Euphorius go crazy,
But I love it. I mean, I'm trading gold every single day, trading it to the long side, and I'll keep, I'll
I mean, it's getting really easy, right?
very
The
easy.
market opens, you go
Right.
long, and
It's
then you
just,
sit
I
you
mean,
sit on your
yeah,
head.
yeah.
You just come up
Every
even.
dip
That's
is
it.
a buy.
and yeah, when you have a market where every dip is a buy, that's a market really ripe for a major liquidation.
Of course, of course. So
Yeah.
once it starts, it's gonna be scary for sure. And I think it's getting a little bit too crowded. Like if I were to get short, I'd be interested. I'd be getting interested, but I wouldn't be getting short just because it's too overbought and too crowded.
Yeah.
Because it can
Well,
continue
just
to get.
I'm curious, what is your process? Like, let's play this through. How would you get if I told you I want you to run me through a possible short trade that you would do in gold? How would that play out? What would need to happen?
Probably some news failure along with a fifth wave extension, right? If I'm trying to pick the top, which I don't really like to do, right? I kind of like to buy with the trend on the wave twos or wave four pullbacks.
Right.
So if we get something like this, a clean, very easy three wave move down, I'd look to buy this, right? And then I'll take some profit. And if we get a new high and a lot of divergence, then we'll know at least we're in some
What
sort of fifth
where
wave.
would divergence be? Would that be in that other indicator?
Yeah, the RSI down here, just like bearish divergence. Yeah, just basic standard RSI.
Right. See,
Bear,
RSI.
That doesn't print the fresh high, and then we give you confidence and divergence on the trend.
yeah.
Yeah. Okay.
And then we see maybe some news that would come out that would be really good for gold, right? Maybe they're printing a ton of money and it's super inflationary. And then gold starts to sell off. That's it. That would be if I do the news failure, like you want to short gold.
Got it. Got it. Interesting. I think
And then you look at positioning too, right? But it's hard to know what positioning is nowadays because we don't get the government data. But once that comes out, I'll definitely like look into see what's gold doing.
interesting. Now, you mentioned you made a lot of calls to your members. Can you tell us a little bit about your which you call No BS Trading Community. What is this all
Yeah.
about?
I mean,
What do you start?
it's pretty straightforward, right? It's trading. It's all numbers. If we're wrong, we're wrong. That's it. There's no way around it. If I'm wrong, I put the loss on the spreadsheet, record all the data, all my trades. I remember last year, I think it was last year, in December, that was a really rough end of the year for me. I think I gave back like 20% in gains back to the market, just bad trades overall, loss after loss. And I was like, man, it's unfortunate, but it happens, and it goes to show that even some professional traders like myself, we have hits and miss. We have bad periods in the market, and I was hitting nothing in December, I think last year.
What were you trading in December?
I think I was trading a lot of crypto and some altcoins, and it just wasn't going my way. I I think I was just making bad calls, and maybe got a little bit too emotional, so I took a break over the holidays, and then you know what? Business as usual came back, and it was just back to business. I think I lost too much money in such a short period of time, and that again, it still happens to me even even to this day. It's there.
Is it a thing you do now? Like when I don't know, you have like a 20% drawdown, you just stop, walk away.
Yeah, I just stop. I just stop, and I'm like, hey, you know what? We've had a great year. Let's not. Let's just stop trading
Right.
and just cash in, and that's it. We'll start fresh next year, fresh account. That's it.
And how long did you take off? Couple of weeks before you could.
Oh, just the holidays,
Right.
holidays until back into.
And that break really helped you look at the charts.
Course, yeah. Oh, yeah. I mean, you just get away from the charts,
Right.
and I actually do like doing that too sometimes. You do a full stop, you come back, and then you put all these, fib targets, and you
Easy.
see if they work down the road, right?
Yeah.
And I do a lot of analysis for my members on stocks sometimes,
Right.
but I don't check on them every day. And then we check back on it in a couple of months, and the targets that we've drawn, the counts that we've drawn, they end up being correct. I'm like, oh look, so it was a correct count. We are correct we are in an uptrend, and it was good analysis.
Yeah. Yeah, it's amazing how, like, a break will give you a fresh insight and help you with analysis. So, what is this community? What do you guys do? And, like, is it something where you do a weekly, uh, post up of charts? Like, how does this work? Tell us.
Yeah, so for my crypto one, like on Crypto Miki, I do daily updates every day. I do like a video kind of end of day recap on what
Right.
happened in Bitcoin. I actually do a video every morning and at night for the private members. For our YouTube, I try to post a video every couple of days. I'm trying to get a little bit more active and post a video every day, but it is
Yeah.
it's a lot of work, right? But yeah, I try to keep my members up to date, and they basically learn the same way. I want them to learn the same way I learn. Learn from someone that's successful, that has made mistakes, and learn from their mistakes so that you can avoid making these mistakes. Right. But again, I can't teach them everything. Some of them, they need to make the mistakes and learn on their own. It's unfortunate, right, that they need to lose some money to learn those mistakes. But I feel like that's like your rite of passage into the market. You need to People who have never lost any kind of money in the market, they've only made money in the market, will never know that feeling of losing money. And then they'll be a little bit more
People who've never
nimble.
lost money in the market will lose everything. That's
Exactly, essentially, right? Because they won't be nimble. They'll be huge risk takers.
Right. Exactly. Um, so do you keep a record of all your trades and do you post it in your community? Do you have like a
Yep,
Other
yeah.
like
Well, I have a website I can definitely show you.
oh, you have a website,
Yeah, I
and
can.
you keep a, like, sort of very meticulous record of all the trade calls. Do you make those trade calls on your videos? How does that work?
So I make my trade calls. I post them on my channel. I can give you an example. Actually, just a bit here. So actually, you can when you go to my website, you just go to performance, and then
Mhm.
you could see my performance for 2022, 2023, 2024. We could actually go to 2024 and take a look. Right, we just took a $5,000 account, and of course, we use a lot of leverage. Right, hence why the returns are so big. But again, I since it's still very highly unregulated and a lot of things can go sideways. I don't put too much money into it, and you can see all the leverage that I use.
Do you trade on exchange?
Yeah, we trade on multiple. or actually different crypto exchanges. It depends which ones I'm partnered with at the moment. Currently, it's BitGet and BitNix, and those ones are two like Chinese exchanges overseas, and you can put any crypto in there, and you could just trade with leverage, right? And I could probably show you at the end of the year. Probably the end of the year, I took like over
200 how many trades is that? It's like 200 trades?
198 trades in 12 months.
Mm.
And you
So
can
that
see, man, like, you see at the end of the year, I just had a rough patch here. I just, just loss after loss after loss after loss. And then on December 5th, we're finished. We're finished. And then it ended up still being a good year. But I think we gave like
when you say leverage,
thousand-
it's
yeah.
interesting because I think people really misunderstand. Look at your leverage. You say, well, it's big leverage, but it's just 3x.
Oh, some of these trades were 3x, but I think we started the year off with 10x, right? Some of them were
They did.
10x. So I alternate sometimes between like 10x to 3x, how much risk I want to take. But
I
you
see.
know, there's a lot more drawdown when you use more leverage.
Oh, yeah, well, I mean,
I
it
should
really
should get a 3%
that's
move down, and I lost 30%.
yeah, it's a huge it cuts both ways, very much so.
And I think I use a lot, and I see people using 50, and I'm like, my God,
Yeah, yeah, no, I mean,
50, 100.
I think 3x is the right
I
answer.
use 3x just because in the stock market, some of the highest leverage ETFs are 3x, and they deem that the highest risk possible.
Yeah, I think
Right?
it makes sense. I mean, when I'm day trading, we have a strategy where I will use huge leverage to get ahead. So, like, I have a high probability trade, really, really confident. I'm gonna just plow large leverage, try to get ahead, and then pay it right back.
Yes,
Like,
for
in other
sure.
words,
That's a little bit different though, right? Because you're doing that for day trading.
Well, yeah, and I'm doing it really for scalping. We're talking about like it's a minute or two hold.
Yeah.
but the concept is the same. It's sort of like, okay, you have an account, um, and you want to get ahead on that account. So maybe you use larger leverage at the beginning of the year to just establish, a positive beachhead. But once you're ahead, you should be paring down leverage instead of increasing it. I think a lot of people
Yeah.
always do it the wrong way, which is, they get behind and they increase their size.
I know they increased to make it. I gotta make it back, and
Right.
that's the whole
You should be
mentality. They should never deviate
right.
from the strategy. The second you deviate, it's over.
Well, you should be decreasing your size the moment you get ahead, which is people.
Protecting profits. Like you can see, like last year, really, I think I was up like 100 something percent, and I decreased it to 3x. I was like, we're gonna protect some of these gains, but
Yeah.
yeah,
And look how smart the decision that was, because you got slaughtered in the end, but at much lower level. Lower I see you.
yeah,
So the losses were smaller, 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 and therefore, the end result. Like if you had simply transposed those losses on a 10x size, you probably would have wiped out all your wins for the year.
oh yeah, it would have been even worse, right? Instead of being maybe up 98, I would have been up 60%. So it would have made a whole lot less.
Right.
And that's
Correct.
that's the whole idea in risk management. It's not about how much you can make, it's about how much you can lose, and you always want to try and risk as less as possible.
Yeah.
A lot of my members, I try to teach them these things, just say like
Right.
they're like, "Oh my god, this could go up 1,000%." I'm like, "It could also go down 99." You have a drawdown, you have a risk reward. It's crazy.
Everybody always wants a 10 bagger, and nobody wants a 90% decliner. It's true.
Yeah.
What are you looking at as we sort of, we're ending the year? What do you think next year is looking like to you? Where do you think the trades will be? Looking at the longer term charts, what's developing? Um, and if you had a gun to your head, what would be the most interesting trades you would be looking at next year?
Okay, so if you had to put a gun to my head and for next year, what would I long, right? What
Yeah,
would
what
I
would you long, or what would you short? Maybe you have a lot of conviction on a short side too.
I would probably stay long
Okay.
the gold miners, right? But the
Okay.
thing is that the gold miners, if you look at the GDX, they have been on such an incredible
Yeah, they've been on fire. They did. I mean, that is a parabolic rise. Yeah.
it's on a parabolic.
Yeah, the irony of the whole thing is we were all talking about it. It was literally the easiest trade in the world.
Yeah.
It took so, like, it was dead money
It took
for
so
so
long.
long.
It was exactly like look how long
Right.
these investors have waited. They've waited years for this.
Right, it was just dead money for so long that everybody forgot about it, and of course, the moment everybody forgot about it is when it exploded, like a rocket.
Exactly. So if we were to get a pullback in gold and the miners take a dive, I'd be very interested in
Right,
picking up the GDX again
right.
because people are, oh, that's it. It's gold. The gold runs over. But I feel like gold could easily
Right,
continue.
if the gold run is not over, they're hedged at 4,000, they have production, capacity forever, and, the fresh, rallying gold would just give them, that second boost in production, profits. So, yes, I mean, they're very, very I think they're always behind, so that means if gold is actually correcting, their profits are still gonna skyrocket because, they're hedged at 4,000.
Well, like
They sold it forward at 4,000, 4,200.
oh yeah, they're making tons of money, right? The earnings are going to be amazing for some of these gold mining companies, and they have almost every economic, like like factor is in their favor right now. They got the wind at their backs. They got gold at all time highs, and they got oil that's crashing. This thing's at $58 a barrel now. They'll be,
And, I'm actually curious. Oil looks like the redheaded stepchild. It's nobody's even talking about it. What do you think? Like, what's oil telling you? Is there a tradable bottom in oil?
there definitely is. We're gonna find a bottom in oil, and it's probably gonna be like when nobody wants it or when everyone's talking about a recession. And oil, it's just gonna you're gonna get a big flush out date. It's not gonna be like COVID at all. I don't think we're gonna get it. I don't think we're ever gonna see that. Like,
We're never going to see negative oil. That's for sure.
but I think once we do get it, I could easily see oil going back up, like straight up back to 100, and it'd
Yeah.
probably be, yeah, it'd probably be gonna be fueled by a ton of money printing, or they're gonna do something, right? The administration that there is currently in place, they're gonna do something that's gonna cause all of this to go back up.
Right. The most interesting unresolved story these days is actually Ukraine, Russia, right?
Yeah.
And of course, Russia is a massive oil producer. I heard something interesting that um, because Ukraine has been just degrading so much of Russia's refinery capacity,
Hmm.
and Russia is really not taking care of its pipes, that there's a possibility that oil could freeze in the pipes, in the pipelines,
So wow.
and when that happens, you can't undo it. Like, you literally have to replace the pipeline. That means all of their, uh, drilling capacities has to stop, and so if you
Production comes
and
to
and Russia, of course, is the second largest producer of oil in the world, so regardless of how you look at it, if they go offline significantly, like if 25% or 30% or 40% of their production goes offline due to weather and just bad maintenance, that could be the reason for why oil could begin to.
Yeah, that's actually, it could 100% be that.
Yeah.
And you know what? You're updating me on some news because I didn't even know what was going on with their pipelines or anything. Like, I don't look at the news at all. So,
I haven't this is the one thing that caught my eye reading news lately, that was sort of an interesting, story there. Um, and of course, like if
it could definitely be a catalyst because I'm looking at natural gas and
you
oil together, and they're kind of finally syncing up a bit. I'm thinking natural gas is going to take a dive to $2. And if oil starts to go down with nat gas, and when natural gas gets to this level, I'd be definitely interested in picking back up oil,
now
natural.
when you're looking for a long, let's say, nat gas, again, would you wanna buy it on strength, or do you wanna just buy it into the dip zone? Like,
I kind of buy it into this area just because it's such a big pattern,
right.
and this one would be catching a wave too, and
So,
it could be difficult to catch waves.
what would happen if it
Double
just broke and came and went back into the pattern? What would you do then?
What do you mean it broke back?
Like, in other words, if it broke that, a point C, like it broke the low of the
Oh,
box, but,
well, break still low. Like it would go below $1.58.
yeah, I mean,
I felt, well, that's it.
for a week or so and then came back up, would you
No, I'm done. I'm out. Bye. I stop out
no,
because
no, but if I'm saying, would you re-enter if it came back into the box?
I could always re-enter and trade against the pivot. But again, I'd be taking more risk. But
Right.
if I'm trading against a pivot, sure. But there's always, gap down risk, right? What if we, Sunday night, there's some news, and then suddenly nat gas is down 20%, 10%, because it's happened before, right?
Oh, yeah.
Natural gas has
I
collapsed at one
but,
point.
it's just like a lot of times catching that dip, um, you get a lot of false breakdowns or false breakouts when you go on the
That's
other way.
true. That's
And
true.
so I wonder how you deal with that, in
I
certain.
just follow this strategy. I follow this strategy, and if they stop us out, they stop us out. We move on. There's always another
Do
trade,
you have
right?
plan B where you reenter if it goes back up or if it breaks the upper end of the box? Um,
Yeah, I mean, like, so this is the thing is like I trade natural gas with like ETFs as well. So
okay.
if nat gas were to break this box, and then the next day, like the market reopens, but nat gas is not down here, we're back up. I guess I don't mind staying into the position, but I'd be taking a little bit more risk. Maybe shave some off, take half off the table, be like, hey, well, we broke the box overnight, and we could easily continue to break down.
Right.
And usually breaking the bottom of the box of a wave 2 like this is means you're usually breaking the lows of the wave 1, which invalidates Elliott Wave, the basic principles of Elliott Wave, which means this is not a 1-2. My count is wrong. I'm wrong here, and that gas is going to $0, or it's gonna go much lower. So or it's gonna have a big collapse. Something's gonna happen to cause natural gas to go into free fall, but I won't mind. My gas bill will go down
Ha
Canada.
have you ever been just whipsawed endlessly with, revisions of, Elliott Wave counts? In other words, okay, you thought it was wave 2, but then it got invalidated, so then you started a new count, but then that got invalidated. Do you ever find yourself in that kind of a
It
vicious.
could happen. It did happen to me a little bit more at the beginning. And then I would like learn, and I would what I would do is like, okay, something's not right. I must be trading against the trend, and I would go back and look at the bigger time frame counts. You always want to start on the bigger time frames
Right.
and then move in to the smaller time frames afterwards, right? So if I'm trading against the trend and I'm trading the wrong count, something, I got to be doing something wrong, completely wrong. But for lately, when you get the trend correct, it works pretty well for you, right? It works pretty well for me. I managed to catch a lot of dips and a lot of shorts on Bitcoin. All these green boxes were successful trades.
Right.
And this one was a really big money winner for me. Like held from like 98 all the way to like 122. And
That's another thing I was going to
we're been in the chop zone now,
How
but
do you have the patience to stay with your trade, or how do you partial exit? How do you manage risk when you're right? I mean, it's very, very clean and clear when you're wrong, because we all know the
yeah,
stats.
we know when we're wrong. Yeah.
Right. It's actually in many ways a lot easier to manage risk when you're wrong. How do you manage risk when you're right?
When I see a good chunk of money and when I start to get a little bit stressed and I check my trade constantly on my phone, I take some off the table. Because usually when I'm doing that, I got too much skin in the game. And I want to have not too much skin in the game. I want to be de risking. I want to be relaxed, right? It's about being not stressed about your trade. If you're too stressed about your trade, you got too much money in the market.
Yeah, I agree. I agree. There's 100 different ways of doing that.
Yeah. That's
I
for me. I could hit some like some targets, right? Oh, we're going back to the all-time highs. Like I'm gonna take some I'll take 30% off here. And we're just in price discovery. I'll take another 20%. Why not? Right.
right,
I don't mind shaving profits. We'll move the stop up and that's it. It's free money at that point.
right.
You just sit on your hands. That's the hardest part, is sitting on your hands.
Right. Well, that's what I was gonna say. How do you say? But once you have 30% off, it's a relief. It's a relief valve.
A relief. Yeah.
I
Like I took a short here recently, right? I took a short here at 15,000 and it started going down. And I said I took 30% off. Right. I was like, we're getting pretty close to these pivots. I'm gonna get out. And then we move back up. Whatever. My stops at break even. Come and stop me out. At the end of the day, I still made 30%. It's no big deal. I don't need to win the whole pie. I just need to win a slice of it and I'm happy.
right. Would you say that's really the key? The key is to have enough size that it's meaningful, but not so much that it pains you if it goes against you. Like um, staying relaxed while you're trading is a really nuanced balancing act.
A 100%. You want to be relaxed because if you're not relaxed, you're stressed. And usually when you're stressed, you're going to make emotional decisions
Right.
when you're trading. And when, you're trading, emotions are the worst thing that you can have when you're trading. You don't want to be euphoric. You don't want to be angry or sad.
Right.
You want to be null. You want to be in the middle.
Fine.
You want to be like, whatever. I made 2 grand. Whatever.
Whatever, right? Or I lost 2 grand, whatever,
Whatever. That's it. Life goes on. There's always another trade.
Yeah, it's hard to maintain that whatever.
Aspect of trading, 'cause ironically,
Easier
'cause
said than done for sure.
I think we all come to trading precisely because we don't like the whatever. The real world is whatever. We want the action, but that in turn becomes its own devil's bargain because the action then turns you into an emotional trader. Um,
Yeah,
and
for sure. That's why starting with small account sizes is good too, because then it's like, whatever, I made $50. And then you train yourself, okay, I made $100, whatever. It's not that much. But then you start to compound your account so much that at one point it's like, oh, whatever, I only made 2 grand. It's only 1% of my portfolio. I only have a 1% increase today.
right, exactly. Yes, you can just it does grow that way, but starting small is always a really good idea.
100%.
Um, so you've had a very, very good success rate. I think you're like at 74% success rate on your.
It's actually gone up significantly since I started using Elliott Wave with the fib targets. It's gone up a lot. I think I was much lower before. I was like 60, 55%, something like that.
Would you say I mean, it sounds to me it's also gone up because you are assiduously trading with trend. In other words, you are uh, the most important part sounds to me like when I'm looking at a lot of your trades, they're longs, longs in they're longs in secular bull market instruments, and maybe that could be the reason for why your success rate is so good.
Of course, right? Sticking with the trend, not trying to prove to everyone how smart you are picking tops. Like I shorted the top on Bitcoin. I've seen so many guys trying to call the top on the way up here,
Right.
and it just, they're gonna have to go delete those posts on X because it's. I mean, we continue to make new all-time highs. That was clearly not the top, and how much opportunity they would have missed, and all their followers would have missed because if they would have just stuck with the trend, right?
I
It's
feel
like
I feel this way about the stock market now. Everybody and their mother is calling it top in the stock market, and there's probably another 2,000 points in Nasdaq left. Who knows?
I know there's actually this banker that keeps texting me. He keeps telling me like the tops any day now, but like it's been like 3 months that the top
Yeah, yeah.
day continue to go up, and I'm like, this guy's probably lost like 20 grand in puts. He continues to buy puts every day. He
Yeah.
said, one of these days I'm gonna get it. I'm like, you are.
Yeah,
You've hardly got it last Friday.
yeah, exactly. Um, is there anything that you like to share with our audience? I mean, one thing about your trading journey that you feel is incredibly important for somebody who is interested in getting involved in the financial markets?
Oh yeah, well, like we've talked about this whole time. Probably start with a small account balance
Okay.
and maintain a level head. It's very difficult, and just know you probably won't be successful in your first couple of years of trading. Maybe your first 4 to 5 years of trading,
Right.
but in the end, right, all that sacrifice will be paid off. In the
Right.
end, you will make a tremendous amount of money. You'll unlock so many doors. You'll see the world a whole different way, and you'll be ahead of the curve because most people don't have the time and the patience to stick in this game, right?
Yeah, I feel like trading is one of those really interesting disciplines where the more you lose, the better you get. You know, uh,
Yeah.
like in other words, it requires far more practice than people would think. Like you could master a cooking recipe within 2 or 3 tries, but mastering a trading setup sometimes takes 50 tries before you really
A hundred.
100. Yeah, you're right. Yeah,
If
you're
you
right.
keep going, right? Keep
I think
going.
that's probably the right ratio. It probably takes about 100 tries before you get even remotely comfortable, not even, you know, truly proficient. And then, much more than that to become really proficient at it. It is a really interesting discipline where like I think the more you fail, the better you get as you go, as long as you're committed to it.
100%. And we're seeing, a whole new trend. A lot more, young guys, young people are starting to get into trading. I don't know if you've noticed this trend. Like, I'm getting all these young guys joining my Discord. They're messaging me, outside of work because I got friends and family, right? Oh, yeah, I want to get into trading.
Yes.
I want to make a ton of money. I just want to make 1% a day. I'm like 1% a day. Geez, if I want to make 1% a day, I'd be retired by now. But it's easier said than done.
I think that's the seduction that so many people hear because 1% a day doesn't sound like it's a lot, but when you understand that really great traders make 20% a year, it's actually
I know.
it's
It's remarkable because I only average about that 20, 25, maybe 30%.
no, yeah,
So
nobody does better than that because it's just not possible. The market otherwise, the markets would be a free giveaway. There are different
exactly, we'd all be rich, right?
right.
Everyone following Jim Cramer would be a billionaire by now.
Who I think Jim Cramer, what is his latest thing? I think he was
I think he said to buy crypto or something at
right. He said buy crypto like
220,000,
right
and then
before
we
it.
we dropped 20 grand on the
The
weekend.
famous, the famous Kramer curse.
Oh, it's funny. When I saw that, I actually started sweating a little bit. I was like, "Well, maybe we should save some more off."
You're saying just like I'm cautious now of gold because Jamie Dimon said he sees 5,000 easy.
Yeah.
When somebody says that, it's always you always want to just be mindful of the
Oh,
terms.
yeah, for sure. Jamie Dimon in his precious metals calls, but
One last
yep.
question: any book that you've read or any sort of writing or anybody you follow that you think is really worthwhile for somebody who's interested in the markets to explore? Um, Maybe something on Elliott Wave or
Yeah,
just
I
generally.
actually have 2 books, that I've read that really helped me in terms of trading. The first book, it's called Technical Trading Mastery, The 7 Steps to Winning with Logic, and this is with a one, written by Christopher Mullen, and
Okay.
this is he's a trader. He's from the
Yeah.
technicaltraders.com.
Okay. And what's another
And then
one?
the second one's the Elliott Wave one, right? Just to learn, like, how Elliott Wave works, how the waves work and everything. It's a Elliott Wave Principle by Frost and Reacher.
Right. Interesting. Yeah. It's funny because for the longest time, I used to be the most greatest Elliott Wave skeptic, but the more I see it, the more I especially see it the way you describe
I
it.
I was probably a bigger skeptic than you, Boris. I had no faith in it. I was like, no, no, no.
But you do an excellent, excellent job of simplifying and elucidating its
Yeah,
various interpretations. So I think it's really good. Speaking of that, where can people find you? Where could if
yeah.
people are interested in
People
your
can find me on you can find me on YouTube just by searching up Crypto Miki.
okay.
They can find me on X as well, same name.
Mm.
I actually post all my trade updates. I actually quote all of my previous posts to show where we are from my previous accounts to kind of give a good track record too. Keep a track record of what I say as well to see if I'm
Right. You
correct or
do that.
right.
You do that on X. You post your previous trades over.
Oh yeah, I post I quote myself and I say, well, just following up from our previous post, looks like we are moving along. The buy area is reacting, but
Right.
I just like to give people an idea of what I think is going to happen.
Right. Very good.
Because if they don't watch the videos, that's fine. They could read the
Right.
posts,
Yeah. Got it.
and they could also find me on my website. But mostly,
And the website is cryptomickey.com, right?
yeah, that's it. That's it.
Okay. All right. Sounds great. Well, thank you once again. Thank you for your second appearance. It's been really, really wonderful. Thank you for giving us all the insights on the various trades that you've traded and going forward into the next year. I will see everybody soon. Please be sure to subscribe to the Trading Battle so we can bring you more content like this. Wishing you guys the best of luck and the best of trading. For the Trading Battle, Boris Schlossberg, over and out.